Hey folks, Dan Frio here, the opening bell with Dan Frio. I am Dan Frio. I do this video every morning to show you guys what's going on in the stocks, crypto, real estate, and bonds. Today, mixed signals, and that's what we're going to talk about when we come back. Don't go away. Well, I think the job report, I hate to say it, might be relevant on Friday. And I hate to say that, but the optimism about the recovery in the economy is far outweighing a lot of other things. And because of that, bond yields or treasuries are starting to increase again. So let's rewind. What happened last week? Okay, what happened is with all the stimulus money going out there and all of the vaccines coming out, which is all great news, okay? It's gonna help the economy, it's gonna help people, it's gonna help, all parts of the economy. However, when you, let me say it this way. You got a credit card and you're like, oh, this is awesome. I got a new credit card. I'm gonna go to Hawaii this week and rent a car and do hang gliding and cliff diving and all this stuff and spend. You're having a great time. And then you get home and a month goes by, you get a bill. And then all of a sudden you're looking at the bill saying, oh my goodness, I owe that much money? My payments are that much? That's the interest rate? I got to pay this stuff back? How am I going to pay it back? Well, that's the whole question behind all this. So the stimulus money, here's what's happening. With the stimulus money, it's going out there. So look at it this way. We're throwing a ton of money out in the economy. Also with the vaccines, and the good news keeps rolling in day and day about the vaccines. So now you have, the vaccine is potentially going to have everybody back to work by the end of summer, at least by the end of the year. So let's look at it that way. So you have all these people that are getting stimulus money. They have forbearances on their mortgage. They don't have to pay mortgages. They have, and I'm exaggerating a little bit on here, so bear with me. I don't need comments down below saying, oh, that's crazy. Just follow what I'm trying to say. I'm trying to make it as simple and kind of blow it up a little bit so you understand. So you get this stimulus check. Fantastic. I got extra money. Well, now you're back to work. You were getting unemployment. That might have dried up, but you're probably getting unemployment. And now you're back to work, so now you got all your income coming in. Also, during that time, you filed for forbearance on your mortgage, or you stopped paying your rent because of the rent forbearances that are out there as well. So you have all this extra money, and the mortgage is starting to come due in a couple months. That's in a couple months. Let's not worry about it. So you have extra money coming in. So here's an Apple phone. Let's say an Apple phone. You want that Apple phone. Well, if everybody's kind of here in the income sphere, we're all bidding on that Apple phone, and Apple knows between supply and demand charts how much they can charge for that Apple phone. Okay, so they charge $200. Just saying. And again, I don't need comments down there. I know if there are thousands of dollars, but just in its simplest terms, they're charging $100. Let's say. Well, now people have more and more money, okay, in their pocket. So now I want the iPhone, but there's only X amount of iPhones available. So I'm willing to pay now $150. So the price of that goes up. This person over here has a little bit more money than me. They got back to their job and they're making more money. And they're like, well, you know what? I want that iPhone. I'll pay $250. Price of the iPhone goes up. As this goes up, what is that? It's because there's only so much goods and services. Manufacturers can only produce X. Okay, they can't produce any more. So there's X amount of being produced. Let's say it's its optimum capacity. So when that price goes up, what is that? Well, it's called inflation. The prices are rising. So that's what's spooking the economy right now. That's what's spooking the stock markets. That's what's spooking the bond markets, and so forth. Okay, so now what we're seeing is because of the glut of money out in the environment, you have, it should be, and it will happen, the value of your dollar has to decrease because there's more money in the money supply, and it devalues the dollar as you throw more and more money into the system. It devalues that value of that product. And in this case, we're talking about $1. So that's what's happening. So what's happening is 10-year treasuries or treasury yields are starting to go up and up and up and up and up. And we're seeing that again today. So what happens is let's say there's two entities you can invest in. There's stocks and there's bonds. Okay, or there's treasuries. and I'm going to lump that into bonds. There's treasuries, corporate bonds, mortgage-backed securities that control or are the biggest piece of mortgages. Those are out there. So you have stocks and you have bonds. Well, when bond yields were, let's say, 0.5%, okay, you're getting 0.5% on your money in any bond. Inflation is 1.5%. So the value of your dollar basically is depleting by 1.5% a year. Your return on the bonds is 0.5%. So you're still losing the value, the purchasing power of your dollar by 1%. So what happens is analysts study the S&P 500. And the S&P 500 has what they call a yield trigger or a yield factor. Okay, that factor is ranging about 1.5 or 6, or they say 1.5 to 1.8. Let's say it's that way. So when you're a financial analyst, I'm not a financial analyst. I'm not a stockbroker. I'm not a wealth manager. I'm a mortgage guy. I do this for your purposes, just educate and entertain you guys. So that's why I'm doing this. Okay. So what's happening is, lost my train of thought there. The S&P 500 yield is, when they do a study of all the S&P 500 stocks, the yield on that is approximately 1.6. Okay. So if I can invest in bonds at 0.4 or 0.5, but I can alternatively invest in the S&P 500 or stocks generically that have an average yield of 1.6, 1.7, 1.8, it's 4 times the amount of yield on any treasuries. So ultimately, I'm going to buy stocks, all right? And you're not going to buy bonds. Well, what's happening right now is because of the devaluing of the dollar and inflation rearing its ugly head, bond yields, treasuries are starting to rise. Okay, now they're equal to the S&P 500 or higher. So now, as a financial analyst, you have to sit there, or your financial planner or your stockbroker will say, we can go with no risk assets with the same yield as risky assets. Well, let's sell our stocks and move into a safe haven. Also, and we're back to war again. We just bombed Syria, and I'm not making light of it. Please don't take it that way. But we're back to bombing places. That was kind of expected when you get a new administration in. It's uncertainty in the world. So you're going to hear a key phrase, you're fleeing to safety. Those are U.S. Treasuries. Okay, so now you have everybody jumping into U.S. Treasuries. That's driving up the yields. What are they doing? They're selling stocks. So stocks start going down. Here's where it snowballs. A lot of other investors, a lot of financial planners and wealth advisors, we put in what we call stop losses. Okay, so what a stop loss is let's say I bought a stock at $50 and now it's $100. God bless me, I did fantastic. I don't want to lose that return. Let's say I'm going away to Florida. I do go to Florida once a month and go down to my home down there. And every time I go, it seems like the market crashes one way or another. So I go to Florida, but I really don't want to focus or have to be on my computer 24 hours a day to see what the stock market's doing. So for safety reasons, I go in and I put what we call a stop loss in that particular stock that it went from 50 to 100. I put a stop loss in, so let's say at $80, because I don't want to lose. I'm happy with that return from 50 to 80. So in that event, if that stock starts to plummet, hits $80, it triggers a sell order. I'm in sleeping when it happens, and it just triggers it. So now I'm protecting my position. What happens is, if everybody starts putting in stop losses, it's just going to snowball the selling. And you're going to start seeing stocks just starting to trigger out of positions automatically. And it's going to snowball or expand that selling pressure, and stocks are going to drop. Then eventually people are like, well, you know what, they're way undervalued. So now I can go in and buy down here. Well, that's what's causing the stock market to crash. So all this in a nutshell, what we got is higher treasury yields or bond yields here are affecting all this other part of the market. It has a trickle effect with the stock market as well as other bonds, especially mortgage-backed securities. So hopefully you can understand now why when we're going to see here again, inflation's starting to rear its ugly head. Treasuries are starting to, Treasuries yields are starting to go up. When you start seeing, everybody's kind of freaking out because of yields going up. Now you know. And that's the whole purpose of the channel, is to educate you guys on this stuff. So let's get into the meat and the potatoes of what's going on today. So let's go to Yahoo Finance. Well, what's headline? Stock trade choppily. I wouldn't have phrased it that way, but stocks trade choppily as bond yields resurge. That's exactly what we're talking about. So I'm going to talk about that here in just a little bit. But there's also a piece down here. It's Biden SEC pick. Crypto markets rife with fraud. Well, for kicks, I'm like, you know what? If people learned about cryptocurrencies and the securities behind it, and I get where you're saying, all these bad people can funnel monies through this system for that. There's actually a fingerprint. You can all track the BitCurrencies or Bitcoins or the cryptocurrencies back to its owner or originator. But people are smart. If you're going to fraud the system, you're going to fraud the system. And I'm not making light of it, but if you really know how this works, it's pretty secure. And you can, the enforcement agencies can go out there and truly track it down to its originator. Now, is that originator going to be the true originator? Who knows? So reading this, I'm like, how much fraud is there in the dollar bill? Okay. Well, just recently, Customs just caught in Wisconsin a shipment of $350,000. One shipment of $100 bills. So, guys, there's fraud in everything. So you can't, educate yourself as much as you can in regards to this. But it's those that find out more and more and more about the cryptocurrencies that get a better comfort level on what's going on with it. Okay, so the weakening of the dollar leads to grim 2030. Okay, so guys, this is starting to tie in to what I'm talking about on a daily basis. So I'm not going to dwell on the bad news. J&J single-dose vaccine is a game changer. So we have the vaccine coming out to halt the pandemic. We have stimulus going out there, flying out there by the gazillions. Now you have a surgence in bonds, and you have the cryptocurrency. So that's basically what the channel's talking about. Let's go to the next channel. What do we got on the Dow Jones? Dow Jones is up 51, S&P's down. Basically let's just say everything's kind of zero. Cool little ticker here is CNBC just added this. If you go to crypto, look at what's going on with these. Bitcoin's up 7% in the last 24 hours. Ethereum up 8, XRP up 4, Litecoin up 11, Bitcoin Cash up 5. We got a nice run. Why? Because these indicators are saying, you know what? This inflation fear is, we need a hedge against inflation, and people are turning to cryptocurrencies for that. Let's see what we got over here. Private payroll growth well short of expectations in February. Awesome. Well, I hate to say it, but this report that comes out today is usually, there's flaws in it. Friday's report is from the government. You could see that, things here. So basically we tied a lot of that stuff together. So now let's go to what's going on with most of the cryptocurrencies. You have this. Now let's go back to here. This might not be the live report. 1038. It is 1038. So this crypto thing is I use a system called Coin Market Cap. And it's giving me the percentage of returns right here. So there's different variations to look at it. But let's look at this. One of these is delayed because this is at 50,724, and this is at where is it? 50,750. I don't know why the yields are different, but the good thing is it's moving in a good direction. So the positions I hold. And tomorrow we're going to have an expert come in, starting to talk generically about what is cryptocurrencies. Then we're going to do a report on how you can research them and maybe get involved with that. And then behind that is blockchaining and mining. We explain that, what those terms mean and how those function. But if we go through it, Bitcoin's up, Ethereum's up. I'm just going over my positions. Litecoin is up. Sorry about that. Litecoin is up. And Bitcoin Cash is down just 0.6. I'll take that. So if I got most of my assets in this area are in these two cells right here. So that's what's going on in the bit currencies. You have yields, Treasury yields, and everything going up. Inflation starting to trick its ugly head. You have a glut of money going out there for stimulus. What should happen to the dollar? It should drop. Let's see what it's doing. Should drop. It's up. Go figure. I still can't get it. I don't know how these traders, but again, guys, a lot of these markets are, I'm not going to say manipulated, but people in the end are in the end. Okay. So let's go to a 10-day chart and see where we are on the line. And we're right there. So I'm okay with that. We're right on the line. I would like to see this at 90 or below. That would make me even more bullish on cryptocurrencies. Now let's go over to our watch list for the day. My staples. These are stocks that I own and or monitor. Google. Here's my staples: Google, Amazon, Apple, and Facebook. They call this FANG, but I'm eliminating, or I don't have a position in Netflix. So let's see what's going on today with these. Down one, down one, down one, down one, say. So all of the major players there are down. But what I'm focusing in right now also on things, here's what I've been adding to my positions on. I do dollar cost averaging with my cryptocurrencies and blockchains and or other pieces of the market associated with cryptocurrencies. Bitcoin Cash today is up 6%. Bitcoin Trust up 4%. Ethereum up 5%. Now we go down into the blockchain. This is the technology that runs, or it's how these all function. It's up. Hive is up 2% today. You go through, Mara is up 2% today, and we got Riot. I got a big position in Riot. It's up 3% today. So those are the cryptocurrencies. What I've been adding to my positions on is XLF. It is an ETF that is in the financial sector. So let's just let's say it owns Citibank and Wells Fargo and stuff like that. The financials are going to be a good play as rates increase. It's up 1% today. 1% today, guys. You don't get that in your savings account for 2 years. Just think of it that way. Disney up 6 cents. Not a big move. This is going to move in a good way. Because as soon as the world opens back up, everybody's going to be going to Disney, going on Disney cruises and all kind of other stuff. If you really want to you want one stock to buy that you don't have to worry about anything else, Berkshire Hathaway. You're hiring basically Warren Buffett to manage your money. That position is up 1.22. If you don't know of Warren Buffett, you've been under a rock for 20 years. But look him up, Google him, and check out his Berkshire Hathaway company and what they do. You'll be very, very impressed. But unfortunately, guys, we see a lot of red today. Okay, so that's what's going on there. Now, where the bloodbath is, mortgage-backed securities. We are getting hammered. I didn't see this one coming until Friday with the jobs report. Let's see what the headlines are. Let me go through the headlines, not trying to bore you. The ADP employment shows an increase of 117 jobs, which is fewer than expected. So why this is going on, I don't know. The only thing it could be is again, this is a seesaw. You can see while we're on here, it went from 8 to 7. This went from 54 or something like that to 48. You're going to see this because we're live right now. This is live trickles. Any other things? Mortgage, you don't care about the Mortgage Brokers Association. Stocks have started the day lower. Dow down 47. Today's update, it's got an update that I do, and so forth. So, I don't know. I'll do the research, and tonight when I post my rate update video, I'll give you guys insight on why this is trickling, because the jobs report came in soft, which that should have been like, okay, with the stimulus package and not a huge portion of people going back to work, inflation will go up because of the stimulus package, but it won't be as hot as if you got a jobs number of 200, 250, 300,000 people. That's what I was fearful of, because if we saw that, I was going to say this was going to happen. But I'll dig in and find out why this is happening. But it's not uncommon because of the stimulus. okay, and all the good news with the vaccines. So the only thing I can say here is between all the good news that keeps coming back from the pandemic relief efforts, Johnson & Johnson and Merck are now going to combine and produce a vaccine, and we should all be vaccinated probably by the end of May is what they're saying. So that is fantastic news for that part of the world or the economy, but the bad part of that is as people go and start getting back to work and everything, inflation's going to rear its ugly head, rates are going to go up, and the stock market is unfortunately going to turn negative. It's just how big of negative are we going to see? Time will tell. So that is it for today, guys. I hope you learned something, and I'll see you around 5 o'clock with the rate update. God bless. Take care. See you in a bit. Bye-bye.